You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means we are back once again. It is Friday. It is noon Central. It is 1 p.m. Eastern. It is time once again for Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from the THE, optionsinsider.com, as well as from the network upon which so many of you are mainlining these days. Hope you're having a good trading week. It's a fun one. Some vol to be found out there, so should make for a fun show this week. Of course, if you want more on the website front, theoptionsinsider.com, the place to go. That'll also get you links to all of the shows we have cooking here, not just Vol Views. I know a lot of you like Vol Views, but hey, there's a whole network out there that you can feast on throughout the week. If you like what you hear, Vol Views, anything else, throw a like, a star, a comment. All that stuff in aggregate does help new people continue to discover the content. And they are legion, new people discovering the world of volatility and options all the time. And of course, if you want to discover more great content, maybe you don't want your broadcast week to end with Volatility Views. You want to come back afterward for a little bit of options oddities. Only one place to go to unlock all that fun and a whole bunch more. theoptionsinsider.com/pro. The place to go to learn more. As we go around the horn and learn who's joining us on the old program today. First, let's go out to the Southern Volatility Mecca, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome back to the show, sir.
Hey, happy Friday. Not so happy a Friday for NVIDIA.
Yeah, happy. Yeah, I guess it kind of depends where you're looking. It started off kind of happy, and then it just fell out of bed. But we'll get there in a second, listeners, because also joining us on the old Vol Views program this week, we have a returning twofer. But it's been quite some time. It's been since all the way back in August of 2020. Since we've checked in with this duo last on the show. Man, that's a long time. We're joined once again by the Thompson twins, Matt and Mike Thompson, now the managing partners over there at Thompson Capital. Gentlemen, welcome back to Volatility Views.
Yeah, thanks for having us on. I was surprised to see that the last time we were on was 2020. Kind of time warped or something.
Yeah. So you've missed a little bit. Lots happened in Vol since 2020. I'm not sure if you're aware. Maybe you've been on the beach all this time. I don't know. But yeah, either way, we've talked about a few things since August of 2020 in the world of Vol. As you might imagine, there's more than a few new listeners to the show since the last time you've joined us. So why don't we start there really quickly? It's your first hit in a while. Give our listeners an overview of your backgrounds in the Vol space, as well as what the heck you do at Thompson Capital.
Sure. So as Mark mentioned, we are brothers. We worked together at various firms since '03 before starting our own asset management firm in 2019. Prior to that, I started in the business in '96 in Chicago with Northern Trust. and then progressively moved to smaller, more boutique firms. Like I said before, starting our own asset management firm. Been specializing in using volatility in our asset management practice since we developed a VIX curve model back in 2009 when we were working at a family office. And we've used that as like our third portfolio manager in the room with Matt and I to manage client portfolios.
All I really want to know is, are we still mulleting and Tuluming? That's what the folks want to know.
Yeah. And that was, I think we've, needed the 4-year break to come up with different code names for new trades.
Oh.
But yeah, there's all sorts of long in the front, short in the back, and the reverse. So
all right, I'm
those
excited.
things still exist.
I'm excited now. All right, you can stay on the show as we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we break down the week that was and indeed still is from a vol trading and trending and analysis and all sorts of fun perspectives. And coming into the start of the show, it's been an intriguing day already. Just leading into the start of the show, we had markets kind of starting the day, feeling their oats a little bit, mostly trending towards the green. Then, of course, we had the jobs report come out earlier this morning. Seemed like a bit of a mixed bag there. But either way, it's really conspiring to weigh on the markets out there. We had, of course, more jobs than expected, so that's a little hotter. So maybe that spooked some people. But also higher unemployment and some downward revisions to other job numbers from earlier months. So kind of a bit of a mixed bag there. But either way, the market's now turning towards the red. S&P off 0.5% now. The Dow just ticking slightly into the red. The NASDAQ off about 1%. And our old friend small caps off about 0.25%. And since the meatball alluded to them, and since they are kind of their own index now unto themselves, NVIDIA off nearly 5% to 44 handles on the day. I guess I missed my chance, listeners. We were joking about those June 750 puts yesterday. I missed my chance to buy those. They were already $30. They were looking kind of juicy. I'm guessing they're a wee bit juicier now, listeners. But a lot to unpack. All this little turnaround we're seeing now is starting to firm up vol a little bit. VIX Cash was flirting with a 15 handle when we kicked off the show at a 1490, up about 1.6 points. VVIX, remember we just said it last week, when it gets into the mid to low 70s, watch out. Doesn't tend to stay there for too long, and that is the case again, back up about 7 points now, up to about an 84 to kick off the show. So a lot to unpack. We'll start with our guests first because it has been a literal eternity in the world of vol since we've chatted with them last. What's catching your eye out there this week? Thompson Twins. We'll get to all the futures fun in a second, but right now, just from a broad market and vol perspective. And how are you folks? How are you enjoying the AI-driven boom that we've all been living in since the last time we chatted?
Right. It's like AI with a side of Ozempic. That's the entire boom.
Yes, there we go.
So this is Mike, by the way. What Matt and I have noticed, and Matt can chime in after, but in the vol space since end of February, we've had sort of hesitancy for vol to decline, even after we keep getting past kind of like data releases, meetings and that kind of thing. So generally, after an unknown known is released, vol tends to kind of breathe. There hasn't been any shockingly poor data been released, but vol's been sort of in this grinding pattern. Like it's not what it's thinking about or what it's responding to is not being satisfied by these releases, even including non-farm payrolls, Powell's testimony this week. So it's a bit of a head scratcher. Why vol's grinding, but we're definitely observing that grind over the last week and a half, 2 weeks.
Yeah, I think grindy is a good description for it. If your other half I'm not sure if is he the better half. I don't know. But if your other half wants to chime in,
obviously the better half.
Have at it.
Yeah. We've got a measure that we call thrust. It's not as cool as mullet, but that is like our read on like looking at the VIX curve. You can kind of straight line out where the VIX futures how they ought to decay day by day, and then we can compare it. We can compare what's actually happening to that kind of proprietary benchmark, and that number is thrust, and a positive number is what we're seeing today, which is basically just telling you numerically that there's some demand out there for these vol futures that is pushing back against the typical decay. So there's kind of some underlying angst here about something.
Does seem that way.
I can't wait till we get to the curve because I want to ask you guys about what's going on there. And that's part of the main reason why I wanted to have you guys on, because I can't make heads or tails of the way it's behaving. And I'm hoping when we get to vol futures that we can get some of your guys' insight on that. But yeah, VIX.
Right. Like the curve is upward sloping, and maybe we can wait for it, but the curve's upward sloping, and we should be seeing more grind, and we're not. And so, yeah, we're looking at the same thing that you are right now.
Yeah, I mean, the spread between that front month future and the second month future in cash is infinitesimal. That's what's really throwing me off.
A lot of things throwing you off out there right now, Mr. Meatball. We'll get there in a second. Let's tease the folks. But before we get there,
all right, we're teasing.
What's catching your eye out there in this week, sir, and in today's Mad Vol Day?
Yeah, I mean, we continue to see the S&P and volatility correlate. And we've seen some of these really high flyers see the same thing. Vol goes up while they're going up. We've got a lot of call chasing. We continue to see option buying is kicking the teeth in of option selling. Buying straddles and strangles with 7 to 12 days out has been borderline like shooting fish in a barrel, because the market realized volatility is eclipsing implied by such a nice clip that it's been very easy to go long premium and make some money.
Our buddy Don Schlesinger will never come on the show again. You start saying stuff like that.
I know, heresy, but it's true. I mean, take a look at where realized is relative to implied, and you tell me which side of the trade you want, short or long.
Yeah, it's definitely hard to argue with that. Maybe a time for the Don crowd to not sell as opposed to sell options. All right, the moment we've all been waiting for. Let's get out to the land of the VIX futures, where the Thompsons have been living for the past 4 years out there. And it has been kind of a bit of a mystifying beast this year, to say the least. There's all the usual setups we would expect in an election year, which is a nice, healthy bit of juice. Almost a 21, listeners, out to OCT 24 now. Just a tick below it as we kicked off this segment, 2098. So we're threatening a 21 handle around election time. Of course, that front March future still hanging out at about a 15. That's up about 1.05 points on the week. The April future up almost exactly a point as well, about 0.9 out there. And yeah, as Mark alluded to, the cash when we kicked off the segment right around a 1490. So there is barely a difference between the cash and that front future at this point. So a lot of funky things to unpack there on this curve. Thompson twins, I know you live out here with your mullets and Tulum, so I have budgeted 38 minutes for you to discuss the curve. Have at it. The floor is yours.
38 minutes. Oh, boy. Yeah, so sort of, I guess, dovetailing on what Mark was talking about, the spread between spot and front month being so basically non-existent. I feel like we've seen that a lot in recent monthly expirations. I don't know if it's basically anticipating, sort of like this non-reaction to equity market dips and vol bumps. But it has been, I think, a little bit skinnier than historically speaking. And, it's continued on, though, for month after month. And it's almost like the front month future gets ignored inside 10 days to expiration to some extent. And the spot is kind of looking out to that second month. So it has been a head scratcher for us. It hasn't necessarily changed our signaling or like how we're reading the market. It's just more of an anomaly to us. And we kind of, I think inside of 5 days to expiration, we roll out and we reference the second month future as our lead for our model purposes. So, there's some of that involved as well.
I'm curious, like I said, we haven't talked with you guys since the heady days immediately post the early days of the pandemic out there. So obviously a lot's gone on in the world of vol since then. As you've been out there slinging your mullets and your Tulums on the term structure over these past nearly 4 years, have you noticed any interesting evolutions in the vol surface, certainly post-pandemic in the last few years, that have maybe caused you to adjust your mulleting and Tuluming?
Yeah, I think I'll start out. I think the sort of rise in the SPX 0 DTEs has, in my opinion, has sort of cleaned up spot VIX as a measure of kind of true 30-day risk. What I mean by that is if you back in 2018, for instance, if you were a portfolio manager and you wanted to hedge a non-farm payroll report the month before that, you're going out and you're buying the SPX options that would be in the VIX calculation as sort of the nearest available options. Now you can almost spot hedge earnings releases, economic reports, Fed meetings, and that kind of thing. So I think it's cleaned up. The VIX has been cleaned up as a measure of like true kind of more systemic type of risk out there.
Yeah, you definitely saw that working its way into the term structure in 2022. So you had the decline as the Fed started raising rates. S&P goes down, whatever it was, 20, 25% maybe at one point. And zero DTEs are in the picture at that point. And, the 30-day risk that is represented by the VIX didn't move very much. I think the highest we saw in that whole episode with it, 25% drawdown, and spot VIX was like in the low 30s, and it was early on. It was like in January of 22, and you hardly saw 30 after that. I think that just reflects the fact that the 30-day risk throughout that whole period never really jumped up into 30-day risk is like there's some problem in the financial system, something longer lived than the next CPI report. So yeah, it's definitely just it's altered the nature. I think it's like Mike mentioned, I think it's kind of concentrated the VIX down into its original purpose of a measure of 30-day risk, not 1 day.
Interesting. So you've been lured into the 30-day vortex as well. Maybe not through explicitly trading them, but for the impact it has on some of the other products that you trade out there. Interesting. It's inescapable at the end of the day. You can't really escape the gravitational well of 0 day. It seems like all roads lead to 0 day right now, which is fascinating in and of itself. Mr. Meatball, I know you've been watching this curve as well. I know it's kind of flummoxing you. So if you also have questions for your buddies here, the Thompson twins, have at it, sir. I've also budgeted 38 minutes for you.
Yeah, this phenomenon really started at the beginning of the year when this rally started to take off, where, as Matt said, it's kind of ignoring that front month. Like right now I'm looking, the VIX is 1525 and the front month future is 1535. A 10-cent spread. And March has 12 days to expire. And even April, right, is only a point above that front month future. Is it that the VIX is elevated relative to the futures, or are the futures being kind of pounded relative to? So I guess my questions are is the VIX rich or are the futures cheap? Would be kind of my first question.
Right. This is Mike. My personal opinion is that the VIX is rich, and I think it is. The VIX futures are sort of anticipating the equity pattern we've seen since this rally has kicked off. Is that any weakness is very transitory. So you got CPI on Tuesday. It was probably the next biggest kind of event out there, and in the backdrop, you don't really have too much in the way of like systemic risk out there. Credit spreads are still tight. You know, the issuance window for corporate bonds is wide open. So you have like this real short-term weakness that has been resolved time after time after time since this rally started. And so you have that sort of being reflected in the VIX futures, like the buy the dip mentality, whereas spot itself, you know, is a little bit rich right now.
So, yeah, does that lend itself to, you know, so the VIX futures are kind of, there's a fight going on is what it sounds like, right? You've got the VIX futures thinking vol's going to drop, and you have the VIX kind of pricing like maybe there's a major event in the works. Historically, the VIX futures have usually been right. You can stop me if I'm telling tales outside of school, but it's been 3 months, and this pattern hasn't. You would think that VIX would have dropped by now.
Yeah, it seems like spot is uncomfortable living like in the kind of high 13s. You know, in the past couple months, it's down there. It gets down there every now and then. It just doesn't stay down there. And on the other side, it doesn't seem like the VIX futures enjoy living above 16 this year. So, you know, you have this sort of tight band, two opposing forces going on.
And I was joking earlier, but only really half joking about your mullets and your Tulums. But first off, what are we doing right now? Are we mulleting or are we Tuluming? And B, since we have so many new listeners, we probably should explain what the heck we're talking about with these setups first. So have at it.
Sure. So the mullet is just a trade on the VIX curve that we named after Sebastian's hairstyle, which is short hair in the front and long hair in the back.
He does rock a mean mullet.
Yeah. So you're short, you know, pick your front month, second month, and then you're long in the deferred months at different ratios, depending on what kind of net exposure you'd like. And then Tulum is the reverse of that. So long in the front, short in the back, and that's typically reserved for, you know, a very flat or maybe even backward curve.
And are we mulleting or Tuluming right now? Are we sitting on our hands? Do we have perhaps a new thing? Maybe we have the wave. What do you have going on? The fade?
the wave, the flock of seagulls. No, right now we're much more towards the mullet or pro beta type of position with what we have going on. Like how our process works, you know, the curve produces a pro beta or negative beta signal every day at the end of the day. So it updates like its 30-day outlook every day. And right now it's pro beta, but we'll see if it changes. I should add the other thing next week. Matt, when does BTFP expire? On Monday?
That's on Monday. Yeah.
Yeah. So you have that bank term funding program that the Fed kicked in last year when Silicon Valley Bank failed. You have that ending next week. So there could be some nervousness in front of that reflected in the spot VIX, whereas the VIX futures may say, hey, that's not that big a deal. So we'll see how that plays out. And I think you'll see some data on the BTFP and other programs usage on Thursday afternoons at like 4:00 Central. The Fed puts out the reports for all their facilities and the monetary usage of those. So it'd be interesting to see. I mean, KRE is green today, so right now, it doesn't seem like small regional banks are panicking about that.
Yes, you're definitely right. There are some other things. We've been speculating on this for a while. It does seem like VIX and the term structure are just pricing in some other shoes waiting to drop, lurking out there, and we're still waiting for what they are. All right, so let's keep rolling out to the land of the VIX options, listeners, because a thing or two may be trading out there as well. Coming into our start of the show, like we said, VIX was threatening that 15 handle, and is it lighting up the tape from an overall volume perspective? I guess the answer is kind of, maybe. It kind of depends what you expect. You know, a day where we have a little bit of whipsaw action, a little bit of turnaround, you might be forgiven for expecting a little more. But the turnaround, the whipsaw hasn't been that extensive yet, so that's probably why we're not threatening a million contracts or anything like that, but still looking pretty decent, especially when you see that the ADV has continued to kind of tread water. It's at about 710,000 contracts a day right now. It's down a couple of thousand from this time last week, but today already 444,000, so That's decent paper, all things considered. We'll get to what's lighting it up out there in a second. First, let's break down the top 10 positions out there. If you're looking for some more puts to be found out there, it's the same as it has been for the last couple of weeks. Only one to be found. Let's see how long we have to wait to get to it, listeners. Number 10, 183,000 of the March 19s. Dare I say it, we're starting off fairly reasonable, all things considered. We'll get to the wacky stuff in a second, listeners. But yeah, starting out fairly reasonably, all things considered. Then number 9, 184,000 of the March 18s. Also, again, fairly reasonable, all things considered. Number 8, 201,000. Now we're getting to the fun stuff of the AUG 47 halves. One part of our old friend, the 1x5, that they seem to be content to put up in literally every month that exists in VIX at this point. Number 7, 209,000 of the March 14 puts. Number 6, 215,000, right back at it to the March 47 halves. Number 5, 47 half, not doing it for you. Allow me to present 220,000 of the May 60s, 6 O's. Now we're getting to it, listeners. Number 4, 227,000, right back at it to the May 47 halves. Again, you got to have one in just about every expiration cycle. Number 3, 274,000 of the March 17s. Look at that. A fairly normal strike, all things considered. Number 2, 276,000 of the April 20s. And the number 1 size position out there in VIX options right now, 356,000 of the March 20s. The March 20s are also the trade du jour out there today. Like we said, 444,000 contracts on the tape. The big dog, 37,000 of them going up today, including a big block just a few minutes ago of 25,000 for 19 cents. So a little bit of a scoop. You like those, listeners? You like that? 25,000 for 19 cents? Obviously, they could be taken off some. There's a whole boatload open on that strike. But if you were opening that position, would you be a buyer or a seller at 19 cents? Might be a fun little flash poll out there. You think we can hit that 20 handle? That's been a thing we've been wringing our hands over for quite some time. If we do get some upside, like we're getting a little bit today, it is very short-lived. You know, that's another question I have for, the two twins. One of the things we've certainly noticed, definitely in the post-pandemic years on the show here, is, we've had a few upside spurts for Vol, but in recent years out there, it does seem like when we get these little blips on the radar from a Vol perspective and Vol starts to surge a little bit, it seems like it's fairly short-lived. And if you want to monetize those, you have a very short window in which to do so. Is that something you guys have noticed over there at Thompson Capital as well in the last couple of years?
Yeah, without a doubt. The last kind of like sustained panic we had was, I guess, the teeth of the COVID stuff in March 2020. And I think that just sort of speaks to like the continuing maturity of the VIX ecosystem. So, there's, when they first started out, VIX futures are almost exclusively used for defense, right? Of pay monthly dividends funded by shorting VIX futures. So you come from like pure defense, all the way to much more of a two-way market, offense and defense, used in VIX products. And I think also it's a little bit of learned behavior by market participants. Like if we look at Silicon Valley Bank last year, between the stress building, them going under, and the Fed launching that BTFP program, was like a week and a half, maybe 2 weeks. So the markets learned that when you have kind of a volatility event, you're going to have the Fed and other powers that be kind of come in and not necessarily bail you out if you're an equity holder of one of those banks that went under, but put in place a backstop which calms vol specifically and calms the market. So it's learned behavior and maturation of just the vol ecosystem.
Let's explore that vol ecosystem a little bit now. Like we said, the big dog today, 37,000 of the March 20s, followed by number 2, 28,000 of the April 19. So we're seeing, dare I say it, reasonable, normal stuff out there on the tape today, which is a refreshing change. Number 3, 25,000 of the March 16s. There we go. Number 4, 20,000, almost 21,000 of the April 18s. And rounding out the top 5 today, there are some puts to be found, 20,000 of the April 15 puts. Going out to yesterday, also, even a week when Powell's talking, you might be forgiven for expecting a little bit more paper on the tape, but not the case. Thursday, 585,000 contracts on the tape. Of the big dog, 58,000 of the March 13.5 puts. That was the big dog yesterday, followed by number 2, 51,000 of the April 50. So we're right back at it to the funky upside. Number 3, 36,000 of the April 14.5 puts. Number 4, 25,000 of the April 35s. And rounding out the top 5 on a pretty light day yesterday, 23,000 of the June 20s. Wednesday, if you want to see light, listeners, I guess Powell just sucked all the air out of the room. 336,000 contracts on the tape on Wednesday. That is a whole heck of a lot of nothing. That is midsummer, mid-December type volume. 32,000 of the March 16s taking the number 1 spot, followed by number 2, 24,000 of the March 14 puts. Number 3, 22,000 of the March 17 calls, followed by number 4, 15,000 of the March 37s, and rounding out the top 5, 12,000 of the March 14.5 puts. Tuesday, 698,000. So far, that's our winner chicken dinner of the day. But today is looking promising. We might be able to eclipse that. The big dog on Tuesday, 34,000 of the March 14 puts, followed by number 2, 33,000 of the March 13 half puts. So quite the put palooza. Number 3, 30,000 of the March 13 puts. Number 4, 26,000 of the March 15s, going back to the upside and rounding out the top 5 there, 26,000 of the March 15 half puts. So pretty much all puts all the time on Tuesday. And Monday, also at least respectable, if not hitting the ADV. 607,000. Again, this is due mostly to our 1x5 friend coming back in. Even though it looks like he did it on a different ratio. Looks like it might have been closer to 1x2. We have 100,000 pretty much exactly of the May 47 halves, followed by 45,000 of the May 22s. Now, usually they've been doing 20 by 100,000. So that's a bit of a funkier ratio there. Followed by number 3, 30,000 of the April 17s. Number 4, 26,000 of the April 13 puts. And number 5, 25,000 of the March 22 calls. Mr. Meatball, are you back, sir? And if so, anything catching your eye out there on the VIX options tape this week, sir?
Yeah, for how kind of for the VIX rallying the way it is, it's not like the volume is blowing the doors off, which, kind of surprised me. Like, we're having a pretty strong day today, and volume's going to barely be above average volume today. Open interest isn't anything special. It just, hasn't been anything spectacular. Today we have a little bit of March action on like the 15s and 16s. So some perfectly reasonable trades going up. Let me see what they did. Yesterday there was a ratio that went up that I thought was kind of interesting. They did the April 50s versus where's the other half of this? Well, so April 50 calls got sold against So they sold the April 35s 25,000 times to buy the April 50 calls 50,000 times. So they did what I would say is a relatively reasonable back spread for even money. I think that's the biggest trade of the week, Mark. Am I right? More March action, but nothing crazy on Wednesday. Tuesday, nothing. I mean, it just has not been a very busy day or a busy week. No massive. You did have, it was not the biggest trade. The biggest trade of the week was the SEP May 20, this weird SEP May 22 47.5 spread that went up. Looks like they bought 10,000 of the SEP 22 calls, 32,000 of the May 22 calls, and sold 100,000 of the May 47.5s. That was the biggest trade of the week, but that was just about 142,000 contracts. But so those are the two big trades of the week. Nothing really kind of punching you in the face saying look out.
Yeah, they keep loving that 22-47.5. They used to do it on a 1x5. Looks like this one went up almost 1x2, which is a little bit of a funkier ratio. I don't know, Thompson twins, we've talked about funky ratios in the past. Does that float your boat at all? The 22-47.5, somewhere in the 1x2 to 1x5 ratio range, most of it on the latter side of that. Is that one that excites you in the land of mullets and Tulums?
Yeah, I mean, I think those back spreads, Sebastian and I have talked about these things for the last about 10 years, I think. I think those are great kind of overlays over a VIX futures position. Generally, pretty low dollar spend, potential high impact, hedging an equity portfolio. Yeah, so all those types of things are, generally attractive to us. You just need a catalyst for that to make that happen. And if you don't, then you're sort of spending some alpha month after month after month. So timing it is always the trickiest part.
Well, speaking of catalysts, I'm dying to pick your brain on this next one, which many people thought would be a catalyst for the return of VIX futures, at least from a volume perspective. It's hard to believe we haven't talked to you since the return of inverse volatility, but that's how long it's been since the last time we've chatted. SVIX has come back on the scene, of course, replacing the much bemoaned, very controversial XIV. If you don't know what that is, listeners, go back, listen to the archives, listen to the February 2018 shows, look up Volmageddon, XIV going the way of the dodo. And of course, the Cboe and others ever since then were wringing their hands. What can we get that will drive some more volume out there in the VIX futures? Again, of course, you have to do a lot of rebalancing with these inverse products, listeners, hence driving a lot of futures volume. Lo and behold, the launch of SVIX somewhere around, I want to say we're coming up on 2 years now, somewhere in that ballpark. So it's been around for a little bit, taking it on the chin a little bit today, obviously, as we're seeing vol get a little bit firmer. Was off about 2.5 points when we started the show, closing in on down nearly 3.5 points, 37 3/4 right now. So retreating a bit off from the highs. I guess our buddy, Mr. Dr. VIX, looking pretty sage-like now and getting the heck out of Dodge on that. What was that, 2 weeks ago now? You'd be forgiven for expecting a little bit more paper out there today, only 3,400. But then again, you see that the ADV is only 4,300, up about 500 this week. So I guess in light of that, nothing too crazy. That doesn't stop someone from trading nearly 600 of the March 40s, 4 today. So maybe taking an opportunity. Looks like they scooped them. So maybe taking an opportunity to get a cheaper bite at the apple. Yeah, they paid 35 cents. Some of them traded as high as 95 cents. Those obviously were earlier this morning, but yeah, I don't like them for 95 cents. 35 cents, maybe. I could see an argument, but intriguing stuff. So let's start there. Obviously, inverse vol has come back to us since the last time we chatted. What were your thoughts on it? Are you fans of inverse vol? Were you kind of some of the people that were hand-wringing, saying they should never bring this stuff back? And then B, what are your thoughts on maybe the impact or lack thereof of this product on the things you love the most, which are the VIX futures?
Sure. So it definitely was not in the hand-wringing camp about bringing these products back. It's like saying, you shouldn't have cars that are able to drive over 55 miles an hour be on the street. It's all about how you use it. XIV was used by some too much, or, too much of the portfolio didn't understand necessarily the mechanics that could tap that thing out. And it became too popular, basically, back after its run in 2017. I think you need, for a healthy ecosystem, again, in the VIX ecosystem, you need products like this on both the inverse and the long side that sort of represent a passive index, right? So you have your natural speculators, natural hedgers, and you have your passive indexers in the middle. And those three cogs work together to have a nice, healthy trading ecosystem for the VIX products. So we're fans.
Yeah, it's interesting. I just looked up real quick the net flows of SVIX, and it's the opposite UVIX, 2 times long versus 1 time short. And SVIX has had net outflows since 2023 as a fund, and UVIX has had pretty big net inflows. So, not all that is like literally, maybe some of that's being shorted on the long side, but it seems like the appetite, even in a good period for inverse vol funds, inverse VIX future funds, the appetite isn't nearly there as it was in XIV.
No, definitely not suffering from the same overabundance of popularity that perhaps XIV did out there. SVIX could use a little bit more of that out there. Like I said, not a ton lighting it up. The big position out there, the March 45 is nearly about 5,600 of those out there. Mark, when we were chatting last week, it seems like you were thinking about getting the heck out of Dodge on SVIX as well. Did you go about it and have anything on, or are you wiping your hands of SVIX for the time being?
I've got SVIX collared, so I've got nothing to worry about there. I did bail on all my short UVIX. It's getting spicy today. Yeah, we haven't talked to them since UVix came on either. I'm sure they're loving UVix.
No, they have not. A lot's happened in almost 4 years.
I know. It's like all kinds of cool stuff that we'd want their opinion on. And I think that this is a very good time to kick back and let SVIX come to you. I'm $30 bid on SVIX right now. That's where I'd buy more.
Yeah, well, it's trending in the right direction for that. And as you mentioned, UVix getting a little spicy out there today, popping nearly 2 handles now, listeners, at 11.5 as of a few minutes ago, up about nearly 2 points, 1.8 points out there. You've been following this show for a while. It takes a bit to really get UVix off the ground to the upside, let alone nearly 2 points. So things are rocking and rolling out there. Also seeing some volume on the tape, which is good to see because it is still kind of light. We've discussed this many times, UVix versus UVXY, liquidity versus a more effective underlying, all that kind of stuff. We won't revisit that today, but we are seeing some paper out there today, including nearly 4,000 of the 12 calls expiring today. I would have said those were absurd not too long ago, but now, I don't know, 8 cents for a flyer? Mark, are you a buyer of these UVix March 12s for 8 cents?
I mean, why not, right? It's a flyer. I mean, I'll buy them before I'll sell them. I'll tell you that much.
That's true. You probably can't get those anymore. They're probably bid up now. I'll have to go look and see. But we're always joking about VIX puts here. Now we might be joking about UVix calls. Wow. Cheap flyer out there. Yeah, you mentioned we haven't talked to the Thompson twins until obviously the other half of SVIX came along as well, UVix. So let's start there. What are your thoughts on UVix out there? And then B, what do you think it will take to get this product maybe to the next level from a volume and liquidity perspective?
Yeah, so UVix specifically, I mean, I think you need an event to happen where the path dependency of that 2 times reset really works for it, as opposed to working against it since it's been listed. Sort of look at its predecessor TVIX back in March 2000, from March 1st through the end of the month. I think it well outperformed its kind of 2x leverage ratio because of that path dependency. So I think you need an event that shows the utility of UVix either as a speculative product or protecting a portfolio. So, until then, you'll have these days like this where it looks exciting. But since it's listed, it hasn't had that sustained period where the 2 times factor has been able to work for it.
Mark, looks like we missed our chance. Those those March 12s expiring today are now at 15 cents. So they've more than doubled.
Oh, jeez.
So we missed our 8 cents flyer. That's what you get for gabbing on this show while all this money is being made elsewhere out there. But yeah, that's how often do we talk about UVix flyers to the upside for a few hours? Yet that's the scenario we find ourselves in today out there. Speaking of flyers, let's check in really quickly on our friends, the April 12s. We talked about that saga. They opened them for nearly $3, $2.70 back on January 26th. They have been mostly slaughtered, but obviously today looking pretty good. They're offered now at nearly $2.30. So they're getting a fair amount of their juice back. Now, obviously, they are short the wazoo, something else against it, so they're not that happy on that front. But on the pure option side that we could see, that side at least doing all right out there. So intriguing stuff. Mark, have you been up to, aside from missing the boat on those March 12s, or anything else catching your eye out there in UVix, sir?
Just that it's it's moving around. It had gotten all the way down into the 8s, and now it's gotten a nice little pop. Pretty interesting spot to keep an eye on, and the curve is really, while we're talking, the curve is starting to kind of wake up. UVix is really 2 things, right? It's what's happening with volatility that day and all these are. They're basically just the volatility curve and where volatility itself is going. But since we've talked, VIX futures are up about 40 cents. So nice little move here nice little move here.
This is it. This is the beginning of the end. They're coming for it all, Mark. Dump it all while you still can out there. This is the moment the worm turned live here on Vol Views out here. How many times have we said that? Listen, joking. We haven't said that too many times, but there have been some intriguing moments in the archives of the show. Let's keep rolling out there to its sibling, not really, I would say colleague on the leverage side, which is UVXY. Obviously a little bit more neutered. We had someone write in saying, what do you mean by neutered? Of course, it's 1.5 versus 2x. That's why we say that. 740 up about 3/4 of a point. That was as of a few minutes ago. It's actually up to about 780 now. So popping hard, up another almost half a point just in the last few minutes, up over a point, about 1.1 points on the week now. So UVXY doing some heavy lifting, also doing some heavy numbers out there. 118,000 contracts already today. That is some size. That's against an ADV of just 100,000 exactly, which is down actually 5,000 on the week. I got a feeling it's going to be moving the other way after today. Looks like 9,500 each of the 7 puts expiring next week, the 7 half calls expiring today, and the 7 calls expiring today have all traded again about exactly 9,500 times. I don't know if that's some sort of funky spread. Let's look really quickly. I mean, if it looks like a duck and it quacks like a duck, but it didn't go up as spread, but intriguing stuff nonetheless. Thompson Twins, when you're not paying attention to UVIX, do you have any time left for UVXY? And where do you fall on that debate? This is something we've been arguing for a while here on the show. We have people like Mr. Vixologist Jim Carroll come on, and he flies the UVXY Defense Force flag, and a lot of people chime in saying they love UVXY. We here on the show have been saying, well, it's more liquid, we get it, but UVIX does the thing it's supposed to do a little bit better, but it's harder to get in and out. If you have a preference of the two, UVIX versus UVXY, where do you fall?
Yeah, so I mean, it depends, I guess, on what side of the trade you're on. If you're looking for the grind of VIX futures when they're in contango combined with the daily reset grind, then UVIX is your instrument to buy puts on. I mean, UVIX would be close behind that, but like you mentioned, it's only 1.5 times. If you have the opposite view and you're trying to time a vol spike, but you think it's going to be, let's say, 10 days out, 30 days out, you're just not too sure, but you have a strong conviction that vol is going to rise, UVXY will penalize you less because of lower reset than UVIX if your timing is off. So, they both have utility, and like you mentioned, UVIX has the liquidity benefit to it. So it really depends on your current view and the timing of the view and direction.
That is a good point. You could view UVXY as obviously being not quite as effective, but also not quite as punishing. That's a good way to look at it as well. If you are a little bit off, UVIX not exactly tolerant for mistakes in timing. You just get run over and that's it. It's like exactly. A day like today, right? If you got any puts in your back pocket in UVIX, those are going the way of the dodo, and there's very little time to get the heck out of Dodge on those. But UVXY, you're right, a little bit more forgiving. So maybe that's another feather in his cap. Perhaps I have been too dismissive of the legions of UVXYs. There you go. All you folks who write in, you're horror angry. There you go. Get some love out there from Matt. Matt, speaking of which, looks like you dug up some interesting data here on what we were talking about at the top of the show. This thing we've been seeing a lot more lately, VIX and SPX doing the dance in the same direction more frequently now than it seems like they have in the past. Looks like you uncovered some data on that for us.
Yeah, it's just a rolling count of the days when of the last, let's see, what's this, 3 months, 3-month rolling periods when with VIX and S&P up together. Like we've seen a lot recently. So right now on this chart, it looks like we're at a high since 2009. Basically, we've got over 50 days in the last 3 months you've seen up together. So, so maybe some call chasing going on a little bit there, or, some underlying bid for some protection being kind of gathered up.
Yeah, I'm looking at this chart right now. Maybe we'll tweet it out, listeners, if we get the okay from the Thompson compliance there. But this is not much has happened in the market since 2009. So that's actually that's an impressive level to be usurping even the taper tantrum of 2013 out there. And so for our listeners out there who are maybe newer to the world of vol and they're hearing this and they're saying, "Wait a minute, I thought they're supposed to move in opposite directions," and now they're hearing that. What would you advise? How would you counsel them in light of this I won't say aberrant, but fairly unusual circumstance.
Yeah, I think to us, spot up, SPX up, a clustering of those occurrences can either be benign or portend, something nastier. So obviously it bears watching. I think the last time I really remember this phenomenon was, remember at the end of August, I think 2020, is when SoftBank was buying all those tons and tons of calls on all the tech stocks. And that activity back then got this phenomenon done. Spot up, SPX up, vol up. So it's like I would consider like a gray box indicator. It's not like a hard and fast tradable signal, but it's something that just says, hey, keep your head on a swivel.
Yeah, I've heard it described as like an unstable market potentially towards the end of a bull run. Like we saw it in January of 2018, which is just before the big Volmageddon thing in February 2018. So there's that observation as well.
And Mark, I know you usually like to approach these in the past with some of your strangles. I know your cohort, the Rock Lobster, is strangling everything. A lot of times you like to do it with, the VIX and SPX. That's going to be a little bit more challenging now because they're moving in lockstep. So how are you approaching this over there?
Yeah, I mean, I think you just have to prepare yourself. And, I've been trading strangles because that's been what's paid. That has been the way to make money in this market.
And to be clear, not your traditional, VIX, SPX strangle, but you're talking straight 0-day SPY and SPX strangle. That's what you're doing?
Yeah, I mean, I've just been buying straight strangles.
When in doubt, go straight into the fire, listeners.
And it's paid. It's hard to lose on those.
So let's get out of here really quickly, talking about the products on, again, this is another product that since we've talked to you guys last, Thompson Twins, kind of fallen out of favor. This is VXX. I think the last time we chatted with you, this product was still in the rarefied air where it could put up more volume some days than VIX could, and those were frequent occurrences on the show here where VXX is putting up over 500,000 contracts and maybe VIX is languishing 300, 400,000. Don't really see that anymore. VXX 1485 now, still popping though, up about 1.25 points today. Putting some numbers on the tape today, 79,000. Again, go back, VIX was just at closing in on 500,000, so still a long way to go. That's higher than the ADV, though, which is 67,000, so that's at least something. Since we've last chatted with you guys, have you, like a lot of our listeners out there, have you washed your hands of VXX given all the other problems it's encountered, or are you still out there watching and playing in this one?
I mean, it's still on, the list of tickers that we watch. I mean, everyone knows what happened with the huge separation between VXX and its IV when they had to stop the issuance. So, that problem has seemed to be resolved, but, I think that kind of knocked the consistent interest in those weekly option trades they're happening all over the place. I think that knocked the interest on that because you can't, that surprise back then, you can't necessarily model it if you're just trying to, do that option convergence trade that was pretty popular. So we watch it. It's better for some of our individual clients that have IRAs that we manage. They prefer VXX because it doesn't kick a K1 to them, that kind of thing. So, it's a small benefit, but it's not nearly as dominant as it once was.
That is certainly not the case, but let's see what's dominant in the rest of the vol market right now, listeners, because it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, as we've been talking here today, we've been conspiring to talk up vol because that's exactly what's happening out there right now. Really quickly, since the Thompsons have been going on, they're all a Twitter, all a buzz about all things 0-day. We're asking you right now, it's expiring in a little bit right now. So by the time you hit the podcast, it probably will be too late, which is why you should be following us over there at Options on the old Twitter, listeners. But we asked you this week, we're coming up, hard to believe, coming up on the 2-year anniversary of all things 0DTE. And just quite simply, we're asking you, now that we have a little bit more data under our belt, are you trading these things? Heck yes, heck no, or not yet? But I'm curious. And we know our audience has been, I think, fair to say, a little bit more skeptical about these things than the broad public. You know, we speak to a savvy bunch, and they tend to be a little bit skeptical sometimes. And early on, there was like 85% heck yes, and it seems like some of those skeptical folks are now starting to get in there because it's 50% heck yes, 43.8% heck no, and 6.3% saying not yet, but I'm curious. So that puts us at exactly 50.1% listeners for the heck no / not yet crowd. So our audience, as I kind of expected, evenly split on this issue, which is fascinating. In terms of data, last week we asked you, what are you keeping an eye on kind of in terms of big market moving data post CPI, or excuse me, post NVIDIA? And we said, hey, next CPI number, next Fed meeting, or a couple other things. And CPI number ran away with it, 61.3%. Next Fed meeting, 25.8%. And then kind of a tie, 6 to 7% each for the next earnings season. And not much sitting on your hands until the election later this year. And then, of course, so we asked you in honor of Leap Day last week, how do you use your leaps? And 62.5% of you said you love a little bit of stock substitution. I get it. It's definitely the most popular use case for them. And then a tie between 12 and 13% for income, long-term hedging, and other out there. All right, let's get to it now. The most difficult, the most dangerous portion of the show. It is time for the crystal ball. I was feeling a little bit lower. You know, that should be your first sign, listeners. I don't fade VIX very often in the crystal ball. When I do, that should be your first signal to go buy the hell out of all the vol you possibly can, because we're north of a 15 handle now, 15 and a half. Spoiler alert, none of us had that on the panel last week. It was myself and Scott Bauer, and he was at a 13 and a half. So yeah, he was closest, still being 2 points away. And I was nowhere close this week. So my goodness, I was looking pretty good right until I wasn't. Wow, yeah, that's no, I don't think no 15 handles on the show this week. So that means our guests, you guys get the dubious honor of going first. Where do you think VIX will be this time next week, gentlemen? You can go in either order. Whoever wants to go first.
All right, Matt, you go first. All right, and then I'm going to Price is Right you.
All right, we're 15.50 right now. I'm going to say we're going to see some regional bank worries next week. We're going to finally have a bit of a pop. I'll say 18.01.
Ooh, wow. That's getting, we haven't had an 18 handle on this show in quite some time. Wow. Yeah. All right. Interesting. I get what you're putting down there. All right, Mr. Mike, are you going to go 18.02? What are you doing?
No, I thought he was going to go lower. So I think the incentive is on the CPI for them to cook the number and revise it to its real number later on, just like all these employment reports. So I'm going to say that the CPI is a nothing burger, and we're going to be 14.12.
Oh, 14. So going almost the polar opposite direction. That's what makes a market, listeners. All right, Mr. Meatball, where are you falling this time next week? What palindromic nonsense speaks to you this week?
I'm going to go with 1661.
Oh, when's the last time you had a 16 handle on this show? Wow.
It's been a while.
Been forever.
It's just something. Maybe I'm wrong, but NVIDIA currently is down $50. I think that there's going to be. I think it's possible that this is one of those periods where it loses like $200 in 4 days, and people panic. Now money is flowing back into Apple. That's the reason why we're only down 30. But I think that the vol's getting a little juicy, and this, looking at Mike and Matt's vol correlation thing makes me want to be long vol.
Yeah, that's it's hard to argue with that chart. 1661, man, we're getting juice all over the place this week, listeners. All right, that leaves me last, and this week I was certainly least. I was farthest away. All right, yeah. Ooh, I don't know if I feel an 18 handle, a 16 handle, maybe. I'm probably closer in the range to what Mike is putting down, even though I wouldn't be averse to some of that other stuff going on out there. But I want to give him a little bit of breathing room. I'm gonna say right below 15 handle. I'm gonna say 1485. All right, that's your vol market for this week, listeners. Mike on the low side, 1412. Then me, the Goldilocks, a.k.a. the right prediction, 1485. And then Mr. Meatball, 1661, a rare 16 handle for him. And then not to be outdone, Matt coming in at an 1801. What's your vol prognostication? Get it in now if you're listening live. Get it in after the fact. By the end of the day today, if you're listening on the podcast. And then you too can play to win some fabulous prizes. All right, that music means we have come to the end of our volatility journey this week. Glad to have the Thompson twins on. Our chat enjoyed it, gentlemen. And we had people like Option God saying he's a longtime listener. He remembers their previous discussions. Nichols saying he loves the mullet and Tulum. He's glad to hear those back on the show. So there you go. We got some longtime listeners who remember your last appearance, gentlemen.
That's good to hear.
You have all 2 fans out there. No, I'm just joking. So since we're not going to talk again for 4 years, let's set it up now. What should we keep an eye on? What's cooking in the market? What do you want to share with our listeners before we go here?
I think just one observation from today. This morning, I don't know if this is kind of an obscure SIBO ticker symbol for one of their indices, but the Core 3M is implied correlation index. So it was getting smoked this morning and has really put in kind of a hammer on the daily today. So you had almost down to $10 or 10 on that index. So COR3M is the ticker for that one. I think if the CPI disappoints, watch this correlation, implied correlation, that will be kind of a tip off to where vol's going to go next week post CPI.
There you go. Fun little nugget to put in your back pocket. And if folks want to check out what you're cooking up over there at Thompson Capital, where should they go? What should they do?
Sure. So our website is ThompsonCM, like capitalmanagement.com. So we've got all our prognostications and thoughts on our blog. Matt writes a nice monthly commentary. All our information is out there.
And Mr. Meatball, if you want to get those 12 calls in UVIX, they're back. You might be able to put in an 8-cent bid and get filled. I don't know. Put it out there. Put that hook in the water. See what you get. In the meantime, while you're working that, sir, where should folks go if they want more pit goodness in their lives?
Yeah, go to optionpit.com. I'm putting out content every day, or follow me on Twitter. I'm trying to give you something every day at OptionPit.
At Option Pit, the place to go. Listeners, we got to get on out of here. If you're on the on-demand side, that will conclude your broadcast week with us. Thank you for joining us this week. Hope you had a good, a fun, a profitable trading week out there. If indeed you're hanging out in the pro, then join us again in a little bit. It's going to be a weird week. What fun craziness do we have in store for you? We got to come back Options Oddities in a little bit. If you want to check that out for yourselves, listeners, only place to go, theoptionsinsider.com/pro. Then I'll be traveling next week for the FIA Boca Conference, so I will be out and about a little bit. We will have shows throughout the week. I just won't be on all of them. We'll be traveling by. We'll be back in time for Vol Views next week, so that should be fun. See you back here. Same bat time, same bat channel. Another episode of Volatility Views. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.